Okay, so what if I told you that everything you think you know about getting rich with Bitcoin is wrong? You've been told you need a whole coin, maybe several to make a life-changing money. Well, that is a lie. In the next few minutes, I'm going to show you why the smartest investors are no longer focused on one Bitcoin, but on this specific amount, 0.1. And why getting your hands on it right now could be the most important financial decision you ever make. This is not financial advice, I'm not a financial advisor, and this is for entertainment and educational purpose only. So most people look at 0.1 Bitcoin and see a rounding error, a fraction, an insignificant piece of the pie. But what if I told you the world's top financial minds see this as a new key to financial security, a strategic position that will separate those who are ready from those who get left behind? But this isn't about getting rich overnight. It's about understanding a fundamental shift in how wealth is defined, a shift that's happening right now, right under the noses of the unsuspecting majority. So stick with me, because what I'm about to share is what people will be talking about in a few years, wishing they had known it today. That common wisdom you keep hearing, it's a trap. It tells you that if you can't afford a whole Bitcoin, you've already missed the boat. It wants you to dismiss the smaller fraction as pocket change, not worth the hassle. And honestly, it's a dangerous mental block, maybe even designed to keep the average person on the sidelines. The media, the skeptics, even your friends might tell you that with prices over $100,000, the game is over for the little guy. They flash the big scary price of a single coin and it stops you from seeing what's really going on. This story makes you feel priced out, like you're standing outside a stadium hearing the roar of the crowd, convinced you can't get in. They want you to think in whole numbers, a leftover from an old school analog world. But in the digital world, the power isn't in owning the whole thing, it's in being part of the network. What the financial elite are realizing is that owning just a small piece is more than enough to secure a prime seat. This all or nothing idea about owning a whole Bitcoin is the single biggest mistake you can make right now, and it's a mistake that will cost people a chance at generational wealth. Let me break down why this small fraction holds such massive power. It boils down to three things: the brutal unchangeable math of scarcity, the unstoppable force of the institutional stamp, and a new wave of thinking about digital assets I call the digital real estate principle. First, let's talk about the math, because numbers don't lie. There will only ever be 21 million Bitcoin. That number is coded into the protocol and is, for all practical purposes, impossible to change. Now let's add another layer, or scarcity. Estimates suggest that millions of those coins are lost forever, locked away on forgotten hard drives and in old wallets. This reduces the real spendable supply even further. Now consider this: there are nearly 60 million millionaires in the world today. If every single one of them wanted to own just one Bitcoin, it would be mathematically impossible. There just aren't enough to go around. Let's zoom out even more. There are 8 billion people on this planet. If the remaining accessible Bitcoin were distributed evenly among every single person, the average shares would be a tiny 0.00246 Bitcoin. If you manage to secure 0.1 Bitcoin, you will hold over 40 times more than the average human could ever hope to own. Owning 0.1 Bitcoin doesn't just put you in the top percentile, it places you in an elite club of global assets owners who saw the digital supply crunch coming before anyone else. This isn't about a fraction, it's about your proportional share of the most secure financial network ever built. The second pillar is the institutional stamp. For years, Wall Street laughed at Bitcoin. Now they are not just knocking on the door, they are kicking it down and are buying everything that isn't nailed down. The approval of spot Bitcoin ETFs in early 2024 was the turning point. It was a global announcement. Bitcoin is a legitimate institutional grade asset. And since then, the numbers have been staggering. BlackRock's iShares Bitcoin Trust alone saw billions of dollars in inflows right out of the gate. Publicly traded companies are now holding huge amounts of Bitcoin on their balance sheets. For example, MicroStrategy, a business intelligence firm, has become a de facto Bitcoin holding company, acquiring over 600,000 Bitcoins. These giants are taking massive quantities of Bitcoin off the market and locking it away in their digital vaults, likely for decades. The era of easy accumulation is closing, and it's closing fast. While you might be debating if 0.1 Bitcoin is worth it, institutions are racing to grab thousands of whole coins. They see the supply shock is coming and they are getting ready for it. This brings us to the third pillar, the digital real estate analogy. Thinking of Bitcoin as just a currency is too small. You need to see for what it is: finite plot of land in the heart of the world's fastest growing digital city. There will only ever be 21 million of these digital plots. Owning a whole Bitcoin is like owning a skyscraper. Fantastic if you can afford it, but not necessary to get wealthy as the city grows. Owning 0.1 Bitcoin is like owning a prime corner lot. It's a valuable piece of the city center that everyone will eventually want a piece of. As the digital city expands and institutions move in, the value of every single plot, no matter the size, is set to skyrocket. You don't need to own the whole map, you just need to have your own plot secure before it's all bought up. Right now, you can still get that that corner lot for an accessible price. But as institutions continue their land grab, the price for even the smallest plot will be pushed into a new stratosphere. And look, this isn't just my opinion. The smartest minds in finance and tech are all pointing in the same direction. They're not just whispering this in boardrooms, they are saying it publicly. Kate Woods, the CEO of ARK Invest, is one of the most respected tech investors out there. Her firm's models project Bitcoin reaching between a base case of over $700,000 and a bull case of up to $2.4 million per coin by 2030. Think about that. At their more aggressive target, your 0.1% Bitcoin would be worth $240,000. But she's not the only one. Michael Saylor, the chairman of MicroStrategy, is one of Bitcoin's biggest corporate champions. His company has relentlessly acquired Bitcoin, and he's predicted that catalysts like that ETFs could push Bitcoin to 150,000 by the end of 2025 alone. He even has a model suggesting Bitcoin could reach as high as $13 million by 2045. At that valuation, 0.1 Bitcoin would be worth an incredible $1.3 million. Even the titans of traditional finance, who were once Bitcoin's biggest critics, are changing their tune. Larry Fink, the CEO of BlackRock, the world's largest asset manager, has gone from a skeptic to calling Bitcoin a flight to quality and comparing it to digital gold. These aren't wild guesses from, internet trolls. These are calculated projections from the people who manage trillions of dollars and shape the global financial system. When they speak, it's a signal of where the smart money is headed. And the network itself backs this up. The security of the Bitcoin network, its hash rate has never been stronger, consistently hitting new all-time highs and recently hovering above 1,100 exahashes per second. That's an almost unimaginable amount of computing power securing the network. This isn't some speculative startup, it's the most powerful computing network in human history, and it gets stronger every day. At the same time, a fascinating trend is emerging. Bitcoin's infamous volatility is showing signs of maturing. As more institutional money pours in, its wild price swings are beginning to compress, with volatility hitting notable lows in late 2025. This growing stability is exactly what will attract the next wave of conservative institutional and sovereign wealth, cementing its role as digital gold. If you're starting to see the bigger picture here, if this is all starting to click for you, do me a quick favor and hit that like button. It takes a second, but it tells the YouTube algorithm that this is a message people need to hear before it's too late. Okay, so I know what some of you are thinking. Here are these huge price predictions, and seeing the institutional rush can feel intimidating. It might even make the goal of owning 0.1 Bitcoin feel more out of reach, not less. But this is where we turn theory into action. This is where you realize this goal is not only achievable but way more accessible than you think. The key is a simple, powerful strategy used by the world's best investors, dollar cost averaging, or DCA. DCA is the antidote to fear and uncertainty. It's a system that takes emotions out of the game and puts your accumulation on autopilot. The idea is brilliant. Instead of trying to time the market and buy the absolute bottom, which even pros can't do, you just commit to buy a fixed dollar amount of Bitcoin on a regular schedule. It could be $20 a week, $100 a month, whatever works for you. When the price is high, your money buys a little less Bitcoin, but when the price is low, that same amount buys you way more. Over time, this smooths out your average cost and most importantly ensures you're always accumulating. It turns market volatility from your enemy into your best friend. Let's run the numbers to show you how real this is. As of late 2025, 0.1 Bitcoin is worth around $11,000. That might seem like a lot in one go, but let's break it down with DCA. To accumulate 0.1 Bitcoin in 3 years, you'd only need to invest about $70 a week. For many, that's what you'd spend on a few diners out or daily coffees. To do it in 2 years, it's about $105 a week, and if you're really determined to get there in just 1 year, it's around $211 per week. This isn't about having a ton of cash to start, it's about discipline and consistency. It turns a mountain into a series of small walkable steps. And mentally, this is a game changer. It frees you from the stress of watching price charts all day. You no longer have to ask, is now a good time to buy, or panic sell when the market dips. Your strategy is set. You are a disciplined accumulator, methodically growing your stake in the network week after week. You start to see price dips not as crisis but as a sale, a chance to get more of this incredibly scarce asset at a discount. You start thinking in terms of stacking sat and watch with satisfaction as your Satoshi count climbs into the millions. Remember, 0.1 Bitcoin is 10 million Satoshis. Framing it that way makes that journey feel real and motivating. So if this message resonated with you, make sure you subscribe and turn on notifications. The game is changing and you deserve to know the new rules.